Vaiopoulos. Okay,
Vaiopoulos.
perfect.
Guys, this is a very special episode. We have Jimmy Vaiopoulos in the studio with us, chairman of risk at FTX. You heard it first. Jimmy, what went wrong?
That would have been the worst position to be in. I couldn't even imagine. I'd be in cuffs right now if I was there.
You'd be dead. In all seriousness, now he is the CFO at Stack Capital. Amazing company. Known them for a couple of years now. We know the guys, great guys. I love the strategy. I first of all, not even talking so much about the business model. Really great group of guys. Really care. Very into it. Give us the rundown. Tell us more about you.
First of all, thanks so much for having me on, Zach. Appreciate it. Always appreciate working with you. So I'm CFO at Stack Capital, also part of the investments team. Stack Capital, generally, it's a public company, listed on the TSX. We IPO'd in June 2021. And what we're doing at Stack is bringing more access to growth and late stage private companies.
Okay.
And so these are, pre-IPO businesses, generally an institutional thing. We got pensions, a couple of big pensions behind us. We had TD, RBC, and Scotia book run us. So very institutional product, but really the genesis of it, which I think is a pretty interesting story, is we're trying to solve a few problems. Number one, private companies staying private much longer. With public companies dropped from 8,000 in the 90s to under 4,000 now. That just means more private companies to invest in, and people don't have access to it. So what we're doing is trying to provide more easy access to it. And the other big barrier is that to invest in private companies, a lot of people don't know this, is you have to be an accredited investor. It means you have to be rich.
Yeah.
And that cuts out 90% of the population. And even if you are an accredited investor, it's super exclusive to get in. And you have to invest in an illiquid investment for probably holding it for 10 years or more.
Before you even see a return.
Before you see any return. So it's kind of wild. And so having in a public company solves all that, which is exactly what we're doing. We're the only ones that are doing this as a focused.
I was talking to my buddy. I'm like, I've got a buddy coming on the podcast tomorrow.
Yeah.
They're a publicly traded company, but they specialize in private. Their portfolio is private companies such as like SpaceX, Bolt, I believe.
Yeah.
I don't know specific ones.
You nailed it. SpaceX are probably the most popular name.
Yeah, exactly. Yeah. So is this common? Is there other companies that are why,
Yeah, so no one has done this on a focused basis the way that we're doing it, where it's permanent capital in there. You have some that are somewhat similar in the States, but at the end of the day, they have to return all their capital. They're called BDCs in the States. It's not the same thing. Mm-hmm. So you don't get that compounding effect that you'd get with like a Berkshire Hathaway.
Yeah.
There's other companies that maybe do 20, 25% of these types of companies of their portfolio. We're 100%. And so what we're trying to be is that slice. But being public, really what it does is you get liquidity, you can buy and sell whenever you want, and you can put in your RSP, TFSA, and you don't have to be accredited. It's one of the only ways where you don't have to be accredited to invest.
So long story short, for those listening, and again, Jimmy's the big investment guy, I am going to speak on this in a very simple manner. If there are a lot of big companies out there that you can't get access to, but if you go through Stack, you can easily buy it on the TSX, or you can buy it on whatever you trade with, I guess.
Yeah,
and that means you actually, in a way, have slices of these companies. Because I know guys that were privately wanted Palantir, and they wanted SpaceX, they wanted all these companies, right? Before it IPO'd. So great. So what happens when a company goes this is again, I'm just curious, what happens if a public goes public inside your portfolio?
So best example, we hold SpaceX. That's a company, we're trying to give people access to what they want. So SpaceX, biggest private company out there, they go public. And we get to choose at that point. Do we want to hold it? Do we want to sell it? We may get some liquidity. It kind of depends on what we want at that time.
Yeah.
But generally, we want to focus on, rolling out of those public companies, going right back into that earlier.
Okay, so stay in that stage.
That stage, because you get better valuations. You get them earlier in their growth cycle.
Yeah.
Your return is higher.
Yeah. And if you waited for them to all go public, you just become an ETF, right? Is that the term?
Exactly. Yeah. If we were just holding a bunch of public companies, other people could just replicate what we're doing.
Yeah.
But we're providing value because we are.
Can you give me some background of, because again, this is a founder focused podcast. I know you were a founder. I think you were the founder of Stack Capital.
Yeah.
You are. Yeah. You're co-founder. You're one of the guys.
Right from the beginning.
Yeah. There you go. Go. Dude, walk us through like give us like 5 years ago, 10 years ago, like what were you doing? I know you were big in like the crypto game, I think.
Yeah,
Give us
100%.
the
So
rundown.
I've always liked the thank you very much. I always liked. So how does it work? Cut back in. I can just go right into it.
Yeah, we're just chilling.
Yeah.
Yeah, that's going to be on the video.
Okay,
Like, this is a
awesome.
very open podcast. Yeah.
I love it. Okay, so what I really liked in my past is being in disruptive industries. So, I started my career out at KPMG. I was an engineer before that, but when I actually worked in industry, I worked in renewable energy, and I got really into crypto, learning a lot about it. And
What year was that?
So renewable energy would have been 2015 to 2018.
2015, 2018.
Early
And
2018.
again, like what type of engineer? I didn't know you were an engineer.
Yeah, so I was a structural engineer. I used to build the foundations for high rises.
Really?
So I worked on Shangri-La. I worked on the Mars building in Toronto.
Where'd you go to school though for engineering?
Western.
That's so cool.
Yeah.
A lot of my buddies are engineers. Okay, so you got into disruptive stuff. You like stuff that's disruptive.
Yeah. I really like a lot of I started my career a lot in like the real world stuff, moved to tech and really just love the tech world and building. So that's that was really the start of it all. But with renewable energy and my love for crypto, it was the perfect segue into crypto mining.
Yeah.
So obviously, biggest expense for any crypto miner is their energy costs, something I knew super well. And yeah, it was a good fit. Very early. Can you imagine 2017? Bitcoin went up like this.
Yeah.
And then as it started going down, I joined the first public Bitcoin miner, just Hut 8 Mining. And like a month after it went public.
When you say public, it's a company that's publicly traded that mines Bitcoin, and their profits are just going to go up.
So this is when, like, think about it. 2017 was the year everyone learned about Bitcoin.
Mm-hmm.
There's like a few insiders who knew about it in 2014 and all that stuff. But 2017, it came in the mainstream media. But no one knew what Bitcoin mining was.
Yeah.
So as I dug in, I really loved it. Like the number, if you did the calculation for what a Bitcoin miner made, like beginning of 2018, it was like 90% margins.
Yeah.
It was
crazy.
insanity.
It was crazy.
Right.
And this company, like, were they mining it here? Were they mining it like all over the world? Alberta.
So the idea was a lot of the mining was done in China and other developing and emerging countries. And we wanted to be the institutional Canadian miner. And now this is mainstream, right? Like there's so much mining that has come to US and Canada. Yeah. But when we did it, it was very hard to understand. It was a very select niche few that wanted to invest in it. Obviously, it was a tough go at the beginning because crypto winter lasted for a while, but eventually, I mean, the return for shareholders there was it was huge.
Yeah, my business partner actually, like he had a rig going on too. Like he had a rig going on for a couple of years.
Yeah,
he wanted Ethereum. Yeah, he wanted Ethereum.
Yeah. So a lot of people do it for heating. They heat their homes now. So. So they're like, okay, I'll lose money on this, but it's fine because I'll just, heat my basement and just heat my whole house.
I'll tell you something. I was like probably 10, 12 years old, 13 years old.
Yeah.
No, well, I'm bad at the math here, but like at least like 10 to 15, 16 years ago.
Yeah.
Like, I don't know. Whatever. Like the fact that you could buy Bitcoins for like 87 cents. Just buy like dad, imagine like going to your father. Cause like back then maybe you don't have your own money, at least at my age. Right? Yeah. Like dad, like, can like for $100 for my birthday, I want Bitcoin. I could have pushed him. I could have convinced him to give me his credit card and buy Bitcoin. And it's just like, when you think about that, it's like, it's crazy. Like they used to do this. I remember seeing this like thing where it's like an online video game tournament, and like the first cash prize, it was like $500. Like then like, $200, $300, then like pizza for the year or something like that. And then like,
last place Bitcoin.
Yeah, like 100 Bitcoins, right? Like it's nuts. Anyways, this podcast's all about journeys. And like, I've came into Stack Capital. First of all, you guys are such gracious hosts. Hey, what up? The fact that you guys all like kind of came away from your computers. And again, like I'm not in the investing space. I was just asking you guys questions. I'm so curious again of like, how did you meet the boys that you're on the journey with today? The team. How did you meet Jeff? How did you meet Brian? Right? How did you meet all these guys? I'd love to hear that.
100%. So Jeff and I went to school together. I'd lived around a bunch. I lived in Vancouver, Latin America, then New York. But when I came back, was hanging out with Jeff, and crazy enough, when COVID hit, we were living in the same building. So there's only so many. Yeah, there was only so many people that you could hang out with, right? So we hung out a lot more at that time, and He was talking about certain structures where the permanent capital structures, and we're also talking about how there's this huge demand for private companies and it's not met at all.
Yeah. You
right?
need big money to play.
Exactly. Yeah. And I had also spent a lot of time on bringing companies public in the public sphere.
Did you
also
work like an advisor to do something, or like a contractor to help companies do that?
So just mostly with the company I worked with, the renewable energy company, that was a TSX venture company. And then Hut 8 was a venture company as well, which I helped bring to the TSX and then to the NASDAQ. But I worked specifically when I was with Hut 8 as the first company to bring a company to the big board, which is the TSX, in a way that doesn't fit the criteria for the TSX. Yeah. So it's called the Sandbox program. We were the first company in it, and I helped TSX with all these types of things to. So you had as the first one. So I had this background of bringing companies public and moving them through that cycle. And so as we were brainstorming, we figured out this could be an amazing product. This could work. So, Jeff had worked with our CIO on the other side of the street. Jeff used to work at a hedge fund. Jason, our CIO, was head of trading at TD. And then Jeff also worked with Brian at his hedge fund.
Brian had a hedge fund.
Brian worked at the hedge fund that Jeff was the portfolio manager for.
Okay.
So it all started coming together. We all met each other one by one. And this was when it was just an idea.
And this is also too, and it was like scary to go to the grocery store too, right?
Yeah, this was like the depths of COVID we're talking about. Yeah. So I was talking to TSX and on this idea, I'm like, can we even do this?
Yeah.
And back and forth. And they said, yes, we'll approve this. So that's when you knew, okay, we can actually get this thing through. Then you start talking to investors. Would you invest in this? And then we started, putting it all together. Can we get this whole product really moving? And all of us, next thing you know, we raised 110 million.
Well,
TD, RBC,
what I
Scotia.
also like too, and again, I'm like biased because I made the video of it. But the point that stood out to me the most is like I know these big guys that like give absorbent amount of money, but they can't touch that money for 5 years, 10 years. Yeah. I like what you're doing because these companies can ride the wave for a bit, and when they want to exit or if they need cash right away, they can get out, right? And I think that's very valuable to a lot of people. I don't think it's so much of the companies you're holding, which they're obviously valuable companies. I think it's the way that we're thinking about the liquidity of the money going into account. So I'm curious on NASDAQ. So wait, you met the boys.
Like flexibility is key, just to your point.
Flexibility.
There's so many people that just can't invest in these types of products just because of the nature of them.
Yeah.
Just having 1% of your portfolio in Stack is exactly what we're trying to be.
Yeah.
Big enough that this could just be their private
So
portfolio.
we get the go ahead. TSX is like, okay, for you, Jimmy, we'll do it.
Yeah.
And then, you tell Jeff and then the other Jason, right?
Yeah. And
Jason?
we're all working together at this point.
Okay. The company's already established.
Not even established. The idea's there and we're like, can this happen?
Okay.
So we're pushing it through piece by piece and it takes a long time.
I guess, and another question too is like, how do you start? Like, do you guys like go like private? Like, not private, but like, how do you like start? Like, because you've formed the company's doable. We can do that. You have the team, you have the dream team. Like, what is the next stage in that usually? Right. Yeah.
The next stage was starting to put together the IPO, which is like when you're doing it the way that we're doing it, the way that we did it, it's like hurting. You have to do everything all at once, every piece, right? Forming the company, to talking to investors, to regulatory, to the bankers, everything has to happen all at once, and all has to work perfect. And we're very fortunate that it did. It took a lot of effort, of course, but it's just hurting cheap at times.
Yeah.
But
it
worked.
When I don't know if you remember when I came into your office, I was so fascinated, and I was talking, I think, to Nerlin, or I was talking to someone about you guys, and like what I would love, like when I think about what you guys do, it's, there's a lot of the numbers and stuff back there.
Yeah.
But I think what is so amazing is the fact that you get to meet, like what I love about my job, to be honest, is I get to talk, one day to Acto, then I talk to another client, then I talk, I get to I'm not working with the same people every day, in terms of my job. And I feel like with you guys, like you get to kind of hop around and like meet these new companies and these new really inspiring people. That must be fantastic to do.
Yeah. That's my favorite part of the job. Yeah. So talking to founders, but beyond that, like learning about their industries, learning about what they make the people special, the company special, the space special. And because we're sector agnostic, we're just trying to find the best companies out there. One day I'll be learning about space and SpaceX. That's and awesome. The amazing things
that
they're doing.
Did you guys go to the factory or something like that?
So I got to visit the facility, their main facility in Hawthorne in LA.
Yeah.
And like, they literally manufacture
it's amazing.
the spaceships there.
Yeah.
And it's crazy. They manufacture them there and they ship them a truck all the way to
Houston,
Boca Chica.
probably. Oh,
So Boca Chica is where they launched the
where's
Starship.
this?
That's just south. That's south of Houston.
Okay, so it's Texas.
And some of them, well, even the Falcons, they bring them all the way over to Florida.
Yeah.
So they're bringing them to Cape Canaveral, which is north of Miami.
Yeah.
So.
Oh yes, I've seen that. Yeah.
Like when I was thinking about the supply, like I'm like, really?
Yeah,
like you guys make these things in California and bring them all over to Florida, but it works for them. And
so let me ask you something. You know, I don't know, like what, I don't know, like, so like you buy X amount into SpaceX, whatever, like, I don't know, like what's a number, like, are you allowed to say a number? Like,
we like 9% of our portfolio, it's like $9 million is in SpaceX.
Okay.
Yeah.
So maybe SpaceX isn't the right example for this specific thing, but like, let's say like a company that's not SpaceX, like maybe a smaller company, you're putting like $10 million into them, $15 million into them. How do you know, this is your baby. This is your baby. You worked so hard from day one to dealing with TXX to you know, establishing the relationships you are. How do you like kind of I know that we talked about this in terms of founders being late stage and they already have plans, but like, do you ever find that like, you know, maybe sometimes the company has a plan that you just don't agree with? And like, how do you separate that from the investment that's already in there? Like, is this something that's talked about? I'd love to.
Definitely. So this is a huge thing in the VC world.
Yeah.
The one nice thing about us is we're investing at a later stage in the company.
It's already,
right. So when we're talking to the company, they're not pivoting. Mm-hmm. They're not, you know, deviating from the plan so far. These are companies that have a CFO, most likely have a board. They figured out what works. These are literally the criteria that we're looking for to even invest.
There's a machine and all you need to do is oil the machine.
Yeah, basically. Really we understand the public markets very well. We understand private market as well, but we're trying to find the best companies that are going to be the best IPOs and the best public companies and get them at a good price.
Fair.
So it's not something, and also the other piece is we've been running over a year and a half.
Yeah.
So there hasn't been any sort of issue like that, but it's not crazy that there is a story where they do a pivot even at that late
it's just
stage.
Like also too, like at the end of the day, like if you look at like $9 billion, $10 million, $15 million, like whatever it is, at the end of the day, you're betting on people and anything can happen to people, right?
Definitely.
I understand you're more established and these companies are much more like, they already have their plan. They know how they're making money. Now it's just about getting more cash to go even further. Right. But I could only imagine what VCs are like that deal with smaller, high risk companies. Like that's a fucking nightmare.
Yeah. And we look at a lot of companies. The one thing we really care about is that they're founder run.
Yeah.
Right. So that's the other thing that really
Tell me about that.
Yeah. Well, I mean, as you know, when you're investing in a company, you're investing in the people, you're investing in the founder and their story and their vision. So that's not something that is lost on us. We care a lot about that. And so as far as I could think of, every company we've been part of, the founders took it from zero to where they are now and want to take it to the end.
Yeah.
And that takes away some of the risk of what we talked about before of pivot or some sort of change. Because if some CEO has just been there for a few months and the founder's out, who knows what's going to happen, right? Because it could be another CEO the next day or whatever.
Exactly.
So buying into this, to the founders, building a good relationship with them, believing in them, that's like a big part of what we do.
Fair. I've always been so curious, and I guess I probably know the answer to it, but like, do you meet, like, did they come to you or do you meet them? Like, cause again, it's all about the journey. Like I met Jimmy at like the Keg, 3 years ago. And, you know, I know he's doing stock and I'm doing this. And like, maybe there's tell me about how you meet these people or how these deals kind of happen.
It's so different for each one. So some of them, we're at conferences, we're out at events, and someone stands out, right? We meet, 20 companies, 30 companies, someone stands out. And because we met them, we built a relationship with them, we get to continue that through. And whenever they're raising money or there's some liquidity in their company, they can think of us, right?
Yeah.
Other times we're just researching and learning about industries and we're hustling and we're finding those companies directly.
Yeah.
And those times we'll make every effort to meet them, but always we're always on Zooms with these folks.
Yeah.
And other ones come from relationships. Relationships are huge.
Yeah.
Relationships with VCs, relationships from friends and family.
Yeah.
So there's so many ways. Really, this is a relationship game. So
I love that, man. I love that. And also too, I love your branding as well. Like I don't know, something about it. I love that hat. I always wear the hat. No, it's good. It's good.
Yeah, it's fitting for for what we're doing.
No, it's awesome. It's awesome. I'm a big believer in it. I'm so curious as well too, in terms of like where you kind of like, because now we're on a lower discussion, because I know you're focusing on more established companies and that's kind of your play, but you also have a lot of knowledge in like more of the startup space in these areas. Yeah. These companies are having a bloodbath of a time getting funds. Like what is going on in the market right now? Like, what do you think? You know, you see it, it's hard to see. You see these fucking layoffs. Like, what do you think's going on? Like with these startups, like how are they gonna?
Yeah, it's tough. As much as, there's cycles and all those are natural, especially for things that are more risky. Rates are going to go up. As rates go up, people go risk off.
Yep.
Just naturally, there's just, that's what's going to happen. Valuations come down and people are going to move to more safer investments, which means less money for the VC pool. And that's the scary thing for everyone, is that they don't know. Early stage companies by nature need to continually raise money. Yeah. Right? They're burning cash. And so they depend on that cycle. And in this market right now, with rates going continually high, they don't know what that next raise is going to look like.
Yeah.
Also, it gets really complicated when you start looking at different structures that companies do when they do down rounds. So if they did
What's a down round?
So if they had a big raise last year from Tiger or SoftBank at $1 billion, but they didn't meet the growth and all the growth goals and everything that they expected to do, then their next valuation may be $500 million.
Yeah, more than they already raised.
Well,
less than.
Yeah, like half of what their last raise was, right? And there's more extreme cases and there's less extreme cases, right? And that gets very complicated in terms of your capital structure and everything there. But the core thing is these companies are burning cash and they don't know if and how they will raise money the next time. And the problem with this whole space is that sure, you may be able to raise money, but you may be kind of, selling your soul a little bit, promising either you get these growth goals or the whole company is theirs.
Yeah.
Right.
Or like kind of cutting it pretty close to the end.
Or cutting it pretty close, or you just can't, you just don't raise the money and you got to completely change or pivot.
Yeah.
And so now the name of the game is bridge to profitability. Yeah. So everything's changed to that now, which is crazy.
So I was actually talking to Chris Delinsky, a mutual friend of ours as well, too. He's a brilliant guy. He's such a fun, you just get an awesome conversation with him.
Yeah.
But he was telling me that, like, there's a lot of stuff obviously happening in the Canadian market, US market, like things are going down. People are starting to freak out a little bit. But he also said that, like, it's important for us to look at the positives that are happening. I mean, I think chat GDP is like amazing to come out.
Yeah.
I think also too, what's going to happen. And I hate to be the person to say this, but like, 13,000 people got laid off today from Google, $10,000, 10,000 people 2 days ago from Microsoft. There's a lot of people out there that can go and form their own companies and change the game, right?
This is the cycle. That's the cycle. This is all these people are going to get laid off. These are incredibly smart people, like amazing folks. They're going to have time. They're going to start companies, and these companies are going to have to be rooted in making money. Yeah. Right. The problem, and
we can't get away anymore with being like, Jeremy, come on.
Exactly.
$10 million. Let's do it. Like, you got me.
100%. When you start these companies thinking that way, this is how you grow into like these amazing companies. The problem is when you have interest rates at 0% and any business model works, it's tricky. And that's what we're feeling the hard, downside effects of that. But I completely agree. There's from kind of, I don't want to say rubble because hopefully it's not that bad, but in these down cycles,
Phoenix's rise. Uber came out of 2008, I'm pretty sure.
And if you look at every cycle in the past, it goes down and it comes right back up. And we're going to get right back to building mode.
So we got to stay confident and we got to make sure that we're treating, like, let's stay away from
or see it as an opportunity.
Shit, but, like, see the opportunities, but also treat these people really well, right? Like, that's something that's so key too. Like, you know, and I think it's also interesting in terms of like where they might go and how they might improve. I think another thing that's really interesting is how Elon has kind of downsized Twitter as like a signal to these other companies, like, hey, maybe you don't need, 50, whatever, how many employees they have to like run a ship here, right? Yeah. All these other companies are probably looking at that and saying, and then the people that are dropping off, right, will understand that they have to build from profitability. It's brilliant. I love it.
It's exactly it. If you read, so I look at public companies, every day, and you just see the complete tone has changed. Even the Ubers, which have never made a $1 in profit
Yeah.
are changing their tune. And you're exactly right. Like everything's got to change. These companies will focus on profitability here, but there'll be a new class of startups at the end of this that come in, and I'm telling you, they're going to crush it. Like these are the ones. These are the folks in this cycle that are the ones to look at. And even if you look at the last cycle in 2008, I think that's where Airbnb started out of. There's a bunch. I saw a list of all the ones. It's like it's an exceptional number.
I think, dude. I hope that we're right. I hope I can come pick you up when we're like 80. We'll go play some bocce or something. Maybe golf if we can still swing. Yeah. But I hope we look back at this era and talk about ChatGPT and like what it kind of like the spark that it lit in the market, right? Like
ChatGPT is a complete game changer.
I love it, dude. It's like the sickest thing ever. Like,
and you know what's amazing is like this. So these guys are the first ones out to market. Yeah. And like it's amazing what their end goal is. Like I don't know if the goal is for this just to be a nonprofit. Yeah. This is not a company in that people are going to hold shares and it's going to be a public company. The whole structure is that it ends up being a nonprofit and kind of open.
Talk more about that because I don't.
So this is from a recent, and information is not fully out on this, but this is from one core article I read. But this is started from. Elon Musk is a co-founder.
Yes, I saw that. This is
mainly from Sam Altman.
Like this guy,
it's insanity. It's insanity. But Sam Altman's the main guy who started.
Yeah.
Sam Altman's PayPal mafia. Yes. So he worked with Elon and all these other guys.
Boys.
Yeah. This is the guy who ran Y Combinator for a really long time. He's invested in thousands of companies. He knows. Anyways, he's one of the most legitimate people in Silicon Valley. So he's the guy behind this, and he's made his money. Like this is not.
So now it's time to take this and make it for humanity. Yeah. I was talking to my brother. I've got an older brother. I don't know if I've introduced you to, but he's a really, really cool guy.
I haven't met him.
Really, really great. Yeah. But we were talking about it, and like this is the calculator of our generation because we weren't alive during like I think this is the calculator for us. Like to get to the answer really, really quick. I think Google is probably shitting their pants right now, in my opinion, because I feel like they might be like. Apparently, there was talks. I heard that they had their own thing, and there was.
I hear they have their own thing, and it's better.
Yeah, but I heard that they were like having talks and discussions. They're like, "Damn, should we have released this earlier?"
Yes,
right? Yeah. So
it's crazy. I mean, the way that Microsoft's getting involved is insane, right? Investing.
Is this a good number? 10 billion.
So I think a big portion, and again, this is rumors. I don't know the exact what it is, but apparently a lot of that 10 billion is just in credits for servers. So as you can imagine,
AWS.
AWS is Amazon's. Microsoft has Azure. So as you can imagine, I remember I saw a tweet from Sam Altman that said they're burning $3 million a day.
Yeah,
and most of that is just in the use of servers.
Yeah,
right. So all the questions, everything, and they're capping it. So it's. I mean, just think about how much computing power this all takes.
Yeah.
So although 10 billion is a lot, some portions in cash, but I think the bigger portion is just in credits.
Yeah.
And so, because that's a lot of money, right? But bottom line is Microsoft wants to put this in everything, right? Yeah. Microsoft is
okay, so coming from Jimmy first, is this a number that is this a good number? Is this too low of a number? Or is this too high of a number in your
10
opinion?
billion?
10 billion.
It's probably just right. These guys, I like it.
Because someone messaged on LinkedIn and I commented, ask for more, period. Like, I don't know. I just feel like.
Well, you can't get, I mean, they have a $29 billion valuation, right? So $10 billion is a third of that.
True.
Right? Like you can't, this is not a $50, $100 billion company. You got to give some return to the folks,
and this is, guys, this is why I'm not running Stack Capital. Like, and everyone's very thankful for that, right?
Remember, they're doing GPT-4 now, right? Like, and they're working on for number 4, which is going to be like levels.
Did you see that picture? That illustration of like the little dot. So like they're like chat.
The comparing the two.
Is it 5 that's coming out or 4?
So it's 3 now.
3 now,
and then it's 4 coming out.
Yeah, they talk about how like it's like this, and then like the thing is going to be like this.
The differences between the two are huge, which is why they need so much money, right? Yeah. And most of it's just compute. Obviously, you need people, and they're designing it, but no one other than like a Google or an Amazon has that kind of power to do that.
Fair. So we got Stack killing it, doing their thing, making moves. Are we a little bit scared that eventually like AI is going to kind of like, come into the market and like not even just Stack, but like just they're going to be a competitor here? Like,
You know what? There's definitely some jobs that I would be very worried about if for AI.
Yeah.
Like I've played a lot with it and I've seen use cases. Like it's very real what a lot of people can do with it. But so definitely, but there's so many jobs that only humans can do still.
Yeah.
And I think that's gonna be the case for a long time. I think AI is gonna get better, it's gonna get better faster, but it's a long way from replacing humans in like a wide scale. You know what I mean? Like the human touch is a very real, powerful thing. And I think we can tell even in 10 years, or I think eventually these AI things are going to get that good, right? The point I'm making is it's not
there.
Imminent,
Right?
Right?
You're not
like
giving it $10 million.
Yeah, like I don't think it's. Yeah, I'm not worried about our jobs. We're still going to be doing this. This is going to be fun. Yeah, it's going to be the same thing as the computer, right?
Yeah.
Like think about what life was like before the computer.
Exactly,
it's insanity, right? Like we're having to write everything. I can't even imagine the amount of people it took to do things. The computer was a productivity
as big as this room.
Yeah, so the computer is a productivity step change.
Yeah.
In the human production, AI is going to be the same thing, right? Humans are going to be able to leverage AI to make our jobs easier. So you're still going to go see a doctor, but a doctor's going to be able to leverage AI to just
increase productivity.
Yeah, increase productivity. So instead, you could type in all your symptoms first, and they give you what the likely cases are, because that's just what the doctors are trained in, and they can make it more of a human experience.
Yeah.
And think about how much everything could be more human. In the world. And that's what I think the next level of progress will be.
Yeah. No, it's very cool to watch. I think it's an exciting time to be alive, man. Yeah. Like it's really cool. You want to know something? I was listening to a podcast the other day, and I don't know if like you're into these type of stocks or like into these type of companies, but CRISPR.
Oh yeah.
They're planning on putting there's going to be a woolly mammoth alive in 2024. Like what the hell?
No, I've read books on this.
What the hell?
This almost scares me more than AI. Like AI can be very scary, like don't get me wrong. But like CRISPR is really near term, like really,
it's close.
Yeah, like really, really close. Like I can tell you some like real life stories of people I know that like CRISPR has been used.
Yeah.
And the problem is that because it's here already, I mean, we can change humans not just at birth, right? Like the birth stuff we could do now.
Yeah.
But we could change them after the fact.
Help them
just
fight
by
diseases.
One shot.
Yeah.
Like
let me ask something.
It's scary.
When we go golfing in 80 years or whatever.
Yes.
You think it's like, Jimmy, like, how are you and Ali doing? And you're gonna be like, oh, like, we're heading over to Jurassic Park. Like, there's a new one in San Diego. Like, do you think that we are going to see dinosaurs ever? You think?
Oh, I don't think it's crazy at all.
Yeah.
I don't think it's crazy at all. Like,
nuts.
Yeah. I think that's not even that far away.
That's fucking scary, dude.
Yeah. Like, I mean, this is just from what I read. Like, I'm so far from
whatever.
CRISPR's
a public company, right?
So there's a ticker called CRISPR, and they do some of that. I mean, the field is huge.
Yeah.
Right. So there's so many companies that are public that are doing that. CRISPR is just an acronym that just means gene editing.
It's like
or a method of gene editing.
It's like tissue Kleenex type thing, right? Like.
So I think it's like literally changing our. I mean, I'm not an expert on it, but I just know it's editing, I believe, our DNA, which is our genes, to have a specific outcome, right, and I'm sure if you Googled it, you get a better definition than that. But theoretically, you can get rid of diseases. Yeah, I mean, you can choose eye colors for kids, like and not by like you can you can make super babies, you can make super humans. Make super intelligent people. Like when I say scary, just to be clear on what I mean, it's in North America, we're very careful about how we use this technology, and it's very regulated. Other parts of the world, they're spending a lot of money and it's unregulated, and we don't know what they're doing.
Yeah.
And you can literally make
our
super
competitors, like Russia, China, like just
totally. And they don't have like the lines that we have as far as I understand. So the progress can be very different between the two, and that difference,
and also the moral compass of where we go with this different. And what we do. Yeah. Fair.
Yeah.
That's crazy, man. That's insane. The fact that we're there and talking about things like that. I've also been watching a lot of these, like, first of all, I've wanted to talk to you about FTX for such a long time. Yeah. I started the podcast off with that silly joke, but like, I'm very curious, like what you think on this and like, how the fuck did this happen? Because, we spent the last 30 minutes or whatever talking about the goods, but like, this is terrible for
Yeah,
like, you know, it's insane.
Yeah, it's about as bad as can be, and I think the biggest issue with it that like hurts me the most is that
It's your space too. You were in that space.
it's my space, and like I could talk about, and I've been a lot of this was being built up while I was very much in the space, hearing a lot about it, and there's so much that happened that is being unwound right now. So it's, you know, think about from 2017 boom in Bitcoin to the, you know, 21 boom, you know, 2 steps forward, but 1 big step back,
giant step
back that's happening right now. Because you have these biggest institutions like
we don't want
Genesis, and they just announced bankruptcy today. And it's pretty wild. But FTX is the craziest of them all, and the people who are getting hurt the most are retail investors. Not to mention, you know, FTX is the case where it's pretty wild. Some of the biggest names out there invest in this company,
like
right?
Tom Brady.
Well,
my buddy's like the Teachers Fund, right? Like he's
Ontario Teachers Fund invests a lot of money. You have BlackRock, you have Sequoia, you know, Lux, like the biggest names that you could think of in invest in this company.
First of all, I want to talk about Madoff too, because that's a crazy story. Is he bigger than Madoff, or is this bigger?
So Madoff was definitely a bigger thing. If I have my numbers right, I think
FTX billion, I think Madoff did or something.
Well, there's like, so for example, FTX got to like a $33 billion valuation, but they raised $2 billion. So they lost $2 billion of people's money, right? And that's only investor money. Then they lost, and they're trying to recover now customer funds and assets, right? Like that's really what hurts.
Because I think you definitely know probably more than I do of like what happened. I know that there was a second company called the research company
Alameda.
Give us like the rundown. Like what is happening here? Once upon a time in where did they all hang out? The Bahamas. They love the Bahamas. These people.
It's I'll give you like some like crazy facts that I know. Please. I'm sure there's like a million more. But just to give you a scale comparing him to Madoff, he lost $2 billion investor money. Madoff lost 20. So we'll come back to Madoff.
We're coming back to it.
But 100%. But so FTX. So from what I read, and you know, obviously there's lots out there. It was a Ponzi scheme from the beginning. So Ponzi scheming, it was a fraud right from the start.
You give me 2, I give Nerf 4, someone gives me 6.
Exactly.
Back forth.
Well, I think the main way that they were doing it was they raised all this money, and this was a very reputable guy. He was very smart. Bankman-Fried. So we'll call him SBF.
Not even that. I think it's also important to note, I hate to cut you off too, I think it's also to the people that he traveled with and his parents and shit too.
This guy's parents were Stanford lawyers, professors. I think his mom was part of the legal team for Hillary Clinton. It's like these people run deep in politics and everything, right? And so this guy, very reputable, did such a good job raising money, building the name for himself. And this is obviously during the time when crypto was just going crazy, right? So if you're riding the front of the wave, you're going fast.
This is like 2017 he's starting.
So I think they only started a few years ago.
2019.
2018, 2019. So they're like one of the newer firms out there. And so they raised money, they built up this exchange, and then they took customer funds, and then they ran a hedge fund with that money.
Alameda Research.
And
who was run by his?
So he's run by his girlfriend, and I know it sounds kind of messed up, but they had this mansion, and this mansion went for sale. So you could see, like, literally you can find it online. And it was like all the founders. And I think there's like, there's rumors of like orgy videos.
How old are those guys?
They're all like 28 to 32. Okay. So these are relatively young people
who should not be, you know.
And like even just like the ties. So I forget her name is Caroline something.
Ellison or something.
Ellison. And she ran the hedge fund, which clearly, again, all part of the fraud. Her dad was the professor and close friend to the guy who runs the SEC, Gary Gensler. So like, it's just everything runs so deep, and it's kind of ties to Madoff, who was like the chair of all these committees.
So essentially what happened was we got this exchange, we're raising money for the exchange, we're taking that money, we're putting it into a hedge fund. And we're not, because my understanding of the exchange is like, that money stays in the, like, it's in the account. Like, you can't really like touch it. You can't do anything, right? Like,
Yeah. So that's essentially, I mean, it's in the account, but the problem is that it was in the Bahamas.
Yeah.
So it's unregulated.
yes.
So FTX, this is a company, no CFO, no board of directors, no governance, nothing. So the top firms all over the world are investing in this company with zero oversight, headquartered in Bahamas.
Yep.
With all the founders living in some Lux house, and people knew about this. And so it just goes to show you the FOMO and greed that was going on, because this company had so much hype around it. The numbers, like, we even took a look at it at Stack. Just
Did you see something?
we did see something. I mean, it wasn't in a structure that we liked, but
Yeah.
we did get to take a look at the numbers, and it's, you look at them and they're almost
Yeah,
not
yeah.
real. Like, it's
Yeah,
just very rare to see those kinds of numbers.
Were your bells ringing a bit back then?
Honestly, we just
But I
thought,
also would understand that's a company that maybe not would want to be in Stack's portfolio in the first place.
yeah, I don't, not, like, we can invest in really anything,
Yeah.
and that was in the sphere of what we could have looked at, but it was growing so fast,
Yeah.
and we thought crypto comes in cycles.
We don't want to be on the up.
And you can't invest in a cyclical industry on multiples as if they're going to grow like that forever.
Yeah.
Right. So it just wasn't for us.
Yeah.
But we were shocked. We're like, these are the best
This
numbers
has
we've ever
happened,
seen.
though. Is this like, like, you think about this guy, like, is this a guy with like no morals who just like doesn't care? Like, like, how did that happen? It's
I wish I could say, you have to be a little bit, I imagine, of a
psychopath.
sociopath, and that just does not think about, because he's a smart enough guy to realize that this is not right. Right.
Mhm.
People are likely going to get hurt, but perhaps, and I'm, the last person to analyze someone else, but he must have thought he could do this forever.
Yeah.
Right. And if the crypto market ran forever,
If he just
He
would have
could have.
stayed away from the research company, like if
Yeah.
he never opened it, like everything would have been fine for me. Would have
yeah,
had a
if
great
you're
life.
making money,
Yeah.
there's no problems.
Yeah.
Right. There's no problems,
Yeah.
because the customer money's there.
You think he's going to jail?
100%.
He needs to.
I think 100%.
Disgusting.
I would put real money down that
Yeah.
guy is going to spend some serious time in jail. The guy pleaded not guilty when his co-founders pleaded guilty.
Yeah.
Think about that for a second. So the co-founders for sure making a deal with the
Crown or whatever, yeah.
FBI or whoever
Yeah,
it is, and for the same charges that he's going down
Yeah.
for. So I'm not a lawyer, but I cannot see a way that this guy loses billions of dollars of retail money,
Yeah.
let alone
Well, it's disgusting
institutional
that he
money.
also like, look, I mean, every investment is a risk. Every
Yeah.
investment is a risk. There's
Yeah.
no such thing unless you go to, Madoff. Like he, 11% returns every year with that guy.
Yeah.
But everything is a risk no matter what it is. And it's very sad that we had to take a step back for the market as a whole because of him. And then all the other companies are starting to fail. And like, I listened to the All In podcast too. I listened to those boys and they talk about like, they were talking to him and they were like sketching out really hard about not having an advisory board. Like they were like sketch.
Well,
like,
that's a perfect
Yeah.
example. I think Chamath said, these are the things we would need to see, governance, all that kind of stuff. And they just responded, "Fuck you."
Yeah, they even put in work to yeah.
these are the
good.
things we need. And it just goes to show you, like, that kind of disrespect for capital and the whole system goes to show you how, that's a big red flag. But
I think you know what? Wouldn't you say that like it's kind of like a relationship where like you'd rather it happen earlier than like, a lot later too, right? Like it could have been, the damage could have been way worse.
I
right?
mean, it could have been way worse for sure, but billions of dollars, because, a lot of people understand the risks.
Yeah.
But the reality is a lot of people just had cash in an exchange.
Yeah.
Right? Like I'm sure we all use Questrade or Robinhood. You think if you have $1,000 in cash that it's safe.
Yeah.
Right? People had $1,000 in FTX and it's not safe.
Yeah. So Questrade just has like one big bank account with just
and it's segregated and it's not going anywhere. And because Questrade is owned by Scotia, it's safe.
Yeah.
And Robinhood's a public company.
So like, just like to understand, like, they can't do like, cause I know the whole thing with the bank is like, you want like the more money you have in the bank, cause then they can play with it and they can like I understand the model of the bank, but like even Questrade, like that money in there, like just stays put, right? Like just holds like
it's segregated. Like, to be honest, as far as like the banks do play around with stuff, they're highly regulated. FTX was not regulated. But they do take that cash and they do lend it out, and that's how people get mortgages and there is a ratio that they are allowed. So theoretically, if everyone in Canada were to withdraw all their money from TD would go bankrupt.
Yeah.
Because they wouldn't have the money.
Yeah. Well,
It's a run on the bank.
Yeah.
And these things happen,
Yeah.
right? Coinbase, for example, that would not happen to. They literally keep it segregated. They don't lend against it. Banks is just a completely different story, right? Like there is real risk there, but
it's crazy.
It changes with each country.
There was like FTX like stadium. Yeah. Like there was a stadium named after the company. Like Tom Brady's boys with them. Like,
yeah, it's insanity.
Yeah.
And the day after they went bankrupt, they took down the name, everything. Yeah, it's
like a couple days ago.
No, this was literally they announced bankruptcy late last year, and the next day they took down the
stadium name,
and they put it up. So
it's crazy. Well, the thing about the Madoff, because I'm watching the Netflix documentary, you need to watch that Netflix documentary.
Oh yeah,
it is terrifying, dude. Like what this guy did. So I think essentially he started married into a family. The father had like an accounting firm, right? Then they started this like private thing, like, you know, go to Bernie. Like Bernie's got like Bernie's the guy, right? So they would do exactly what we just talked about with FTX. So they'd have this like fund and give it to Bernie, and then, you know, the Ponzi scheme started, but then he got to such a big number where like, because, you know, you always need the next deal to keep the Ponzi scheme going so you can pay back the other people and take your cut. That he had to start messing around with like hedge funds and stuff like that. And he had like a pretty legitimate operation trading business as well too. Yeah. And dude, like, I don't know if the movie, because you told me you watched the movie.
Well, I watched the one with De Niro playing him. Have you seen that one?
Never. I'm going to that.
I would even if you've seen the show, it's really well done. It's and I've read about it. It's crazy. I mean, that guy spent, you know, to your question on SBF going to jail. This guy spent the rest of his life in jail. And I think it was like multiple life sentences. But you know, it is a crazy story. The one big differentiator between the two, I mean, the number was way bigger. $20 billion. I think he said he had in the 60s or 70s, somewhere around there. But he was raising money from people who had money.
Yes.
Right? He was raising money from accredited investors and all these kinds of things. Not to say that makes it okay.
Yeah.
But it wasn't mom and pop shops. FTX was all, you know, just random people who maybe have a few $1,000s in savings.
You know what? I think both these guys, like, they know how to play the game, but I don't think they can control themselves. What Bernie did, like, dude, that guy could have, like, you know, just keep your trading business. He didn't want to register as like a, what is it called? Like, in order to give investing advice, you need to be registered under the SEC. Yeah. Is it SEC or SEC?
Securities and Exchange
Yes,
Commission.
and it always sounds like SEC, which is weird.
Totally. Because there's FCC, there's like all these other ones.
But what he did was like in the documentary, like the fact that he does what we did with marketing, you know, but like we obviously aren't like doing like frauds and stuff, but like he applied the same laws of marketing where it was kind of like, you know, you want to talk to, I know a guy, like he only talks to certain people. You got to meet him. The fact that he would turn people down purposely to perpetrate that whole thing of like him being very, you know, because then what he could do is like, you know, you go to him and he's like, no, you know, maybe Ali goes to him and he's like, no, but then like he calls you in 2-3 years and you're like, yeah, dude, it was crazy what he did.
What's crazy is he really understood the psychology of an investor because the whole thing was a fraud, right? So he knew exactly what to say. He invented his returns, right? So he just said, you know, he didn't have that money in the bank. He would, you know, if he received $1 billion and someone asked for $500 million back, you'd just play with that money. So he knew exactly what to say for the returns so that he could just keep getting more money and just a little bit better than everyone else. But the biggest red flag, which is insane that no one caught it, but it was so steady, the returns, right? So the top fund managers, you know, if it's a down market, they may be down a little slightly less than the market, and then in a good year they'll blow it out. 1 or 2 years they'll blow it out. This was just a steady
always
time.
10.
Oh yeah, 10, whatever
10.
It was.
You know, it's actually, so I'll go into like a little bit more depth of like what he did there in the psychology in terms of like, there's a point where like he starts making his money and he moves to Palm Beach, and it's a very predominant Jewish area. These people are all like survivors, Holocaust survivors, you know, they're affluent families. They made their money. The thing about Palm Beach back then in the States around the 60s and 70s, Jews weren't allowed to be everywhere. So they kind of had this like one space, right? And Jews also too, like there's that, you know, they kind of like, they communicate as well too. Yeah. And he went and he met a lot of these people. He got a membership at the golf club, you know, he played the game properly, but he took advantage of a lot of people, survivors. And I'm not even talking about even non-Jews too. But he played the game with these people very like it was disgusting
Yeah,
to watch it.
it's
And
so
even
bad.
it was fucked up, man. Like and the way that he manipulated people, it's crazy. He played greed on them.
Yeah.
Insane.
Yeah, it's kind of one of the lowest forms. And so obviously everything you're saying is like despicable.
Yeah.
And then the part that even goes beyond that, and I don't know if you got there in the show. I haven't seen the show, but
episode 4.
Okay,
Episode 4.
but the way his family took it after is
like,
really
I'm pretty
bad
sure one
too.
of them killed themselves.
I mean, pretty much everyone
Is dead. They're gone.
yeah, like it's not a good stick. He outlived most of them.
Yeah.
And his family ratted him out.
Yeah.
Right? Like they did not know, and they got hurt a lot because you can imagine the death threats, and I'm not trying to make them sound like they're you could say they're victims in some way, but it is really crazy to think, so many people got hurt from this.
Yeah.
And
dude, people would because why not? Like he's like done right for me for 15 years. I just got another 900 grand. Like, why not?
It just goes to show you, like, we need a good regulator.
Yeah.
Right. We need regulation as much as a lot of people in the crypto space may.
Well, they're like, fuck the
just let people go.
No, we
need regulation.
Yeah.
You need like a strong hammer from the SEC, because even Madoff, who I think was on the board of NASDAQ, he or the SEC, I forget what it was. He said this could have been figured out with a few calls.
Yeah.
Right. It's there's more that's got to be done.
Yeah.
It's just really crazy.
Yeah.
When you really break it all down.
When you were into like the crypto game and you were getting into it and stuff like that, were you like very like did you, because like, things happen in life and they take precedence. Like now we know to be a little bit more cautious with what Madoff did and what Bankman did, right? Like, were you back then, like, was your argument like, were you I
was always for regulation. So regulation to me means institutionalization of everything. So the more regulation, number one, tells everyone that the government is comfortable with what they're doing.
Yeah.
So that means they've acknowledged it. They said what their stance is on it, and they said how they're going to approach it from a government, legal, tax perspective.
Yeah.
So all of a sudden, what does that say? That says to any investor, okay, this is not illegal. This is not against my government. This is not whatever it is. So now I can get comfortable.
Yeah.
So that's number one. Number two is it helps everyone just understand how to navigate the industry, right? Because you don't know if one thing you're doing is going to be not allowed tomorrow, or you just don't know, right? So it just provides clarity in the whole thing.
Yeah.
And then the other bottom line of the whole thing is it's inevitable.
Yeah.
Right. If it gets to enough size and enough people are in it, this is the clear example. It doesn't happen. People get hurt.
Yeah.
And so because we did not regulate how these exchanges outside the US and in certain ways work, people lost billions of dollars.
Yeah.
Right. This is
so crazy.
I'm not saying like obviously SBF is at fault and the exchanges are at fault.
No, but also
the regulators were slow.
Yeah.
Right. If the regulators were fast, and if you look at the average age of Congress or any of these folks,
these guys aren't.
It doesn't shock you, right? Like it's wild. Like the average age is like in the 70s and 80s.
Yeah.
Like, are these people really regulating crypto?
Yeah.
Like at the front edge of this stuff.
Like Dianne Feinstein, she's like,
you're like, look at the average. It's mind boggling, right? And so they're slow to it, and people got hurt. People got hurt, and that's what's good. That's what happens if you don't regulate it. So it's inevitable. You might as well just figure it out now and then adjust. You're gonna get it wrong. They're gonna get it wrong.
So
you have to be okay
I'm curious because, like, again, you're the CFO of a publicly traded company. Like, how do you like? Does someone come in and just like check your books every now and then? Like, is it like surprise, like a restaurant kind of like? So how does that work? I'm so curious.
Yeah. So as a public company, you're always open to scrutiny. We have to file quarterly statements to the public, and we have to stand by those. Like, I have to sign and publicly put out a certification that these statements are
legit,
correct.
You put your life on
exactly,
it. Like,
and that we have controls and everything like that. So I put my career, I put myself on it, right? And then every year we get an audit, and we get an audit from a reputable firm. Our auditor is PwC.
Do you have to pay for the audit?
Oh yeah, it's not cheap.
Come on.
No, we publicly say it. Yeah, so it's over $100,000.
Damn.
We're around $100,000. So,
Yeah.
and I mean, if you're in the crypto space right now, regardless of how big you are, these are like $1 million, right? Because it's so complicated to audit crypto companies.
How do you guys like it's again, like I'm coming from like a very different world. Like, you know, we're all about QuickBooks Central here. QuickBooks Online. Like, how do you guys manage? Like, I'm just curious. Like, is it like crazy software? Like,
it all depends on the complexity of your operations. When it comes down to asset management, it's like really simple stuff.
Yeah.
Like when you really think about what we're doing, and like so I've seen a lot of different accounting software. I don't think we need to go down there. But at the end of the day, the more complex your operations are, the more complex the software and systems behind it. So if you have projects with big contracts, if you're a big supply chain, if even just a lot of staff that need to put in stuff, you're going to need more complexity. For our business, that's not the complexity.
So me, Nerd, and Evan are sitting here right now. Let's say Evan puts in 200K, Nerd puts in 300K. I put in like, $1,000.
Yeah.
So like, how does that work in terms of like, how do you get the cap? Like we buy the stock and then like, what does it get transferred into your bank account eventually? Like, what is the lead time on that? Like, I'm so curious about that.
Yes, we did the IPO.
I should go back and say that it's very rare that someone would just go and buy like, $250,000.
It's not.
Oh, okay.
At all.
Okay.
Someone might be doing it today.
Okay.
Right. So it's not. Like, there's people buying and selling our stock every day.
Yeah.
Every trading day.
Yeah.
So not crazy at all.
Yeah.
At all. So there's different ways to raise capital and different ways to bring money in.
Yeah.
Right. The first way we did it was an IPO, an initial public offering.
Bet on these boys. Let's do it.
Yeah. So we raised money. That capital came into our bank account, and we gave them shares in our company, Stock Capital Group.
Yeah.
We haven't raised money since.
Okay.
But we are on the TSX, so our shares constantly trade. So someone who bought into the IPO may say, actually, I need the cash to buy a house.
Yeah.
So I'm going to sell 10,000 shares.
Yeah.
They put that out in the market. Someone else wants to buy it.
Okay.
And then they buy those 10,000 shares, and that price is agreed to on Quest Trade.
The way I was looking at it was like totally different.
No. So you're just out in the market. So you put a bid, someone else puts an offer. Enough of those happen. People meet, they find the right price.
Yeah.
And none of that capital goes to us.
Yeah.
And then, it's just people out in the market creating a price, this price discovery.
Fair.
And we're actually out in the market ourselves. We're buying our own stock. We have a share buy.
I love it.
Yeah. We think our stock is at good value right now that we're buying it.
Yeah.
With our own money.
So I guess give me like, we're 2023, right?
Yeah.
2022 is like, good year. It was fun. What is the plan for 2023? You want to talk a little bit about what Stack's plan is, what you guys are looking at, how you guys are reacting to the market? Like, give me the rundown. And why are you purchasing? You've heard it first, everyone. Why are you purchasing in-house for $5 million cash up front? What have made you guys like to agree to decide this offer? Anyone listening, that's a joke, by the way, but give me the rundown.
You got to up your numbers a little bit.
Yeah.
This is, so plan moving forward, it's more of the same is the short answer.
Yeah.
So we want to find the best companies out there. Really we're focused on North America, but we're still, we're looking at the world. But we want established companies that are really doing something amazing, really something disruptive. And so we have invested, more than half of our capital, and so we still have some capital left, which is amazing in this type of market
because everything
it's corrected.
It's corrected.
Exactly.
So you got like more cash than.
So valuations are better. Structure on those investments are better. The biggest players have left, creating more space for firms like us to invest. And so our, 2023, we want to find the best companies to invest the rest of our capital.
Yeah.
And then the next piece is, during all that time, we want to help the companies we've invested in. So we're working with our portfolio companies to make them as strong as possible, connect them to whoever we can, gear them up.
You're not just sitting there. And,
we're not just sitting.
So
we're not
kind
passive.
of an advisor in a way.
Yeah. We're the reason why we invested is because we like the founders. We've talked to them. We are, we've built a relationship there. So we want to help them. We want to make them do whatever we can to make them a success.
Yeah.
And we want to stay close to the market, but eventually those companies are, the IPO market's going to open up again. Things are going to go great. And we think the companies we have are going to be some of the companies that are first out to the gate.
Yeah.
first out the gate in that IPO market. And
Yeah.
we're going to keep having capital.
Any spaces you might be, looking at, or anything
Yeah.
you're thinking that you're watching at least?
Yeah. So the one that we're very excited about right now, and we made an investment in this recently, is robotics and automation.
I heard you have purchased a fleet, if you will.
Yeah, it's a
I've
company
seen
called
that.
Locus Robotics. Incredible company.
Yeah.
Like large scale warehouse automation. But when you think about, and this is a lot of the way we work, part of our journey is finding spaces that we think are good investment.
Safe.
Yeah, it's safe because we have permanent capital. We want these things to do well. Like we're not going for the zeros or heroes. So the automation space is very interesting because what you're seeing is a little bit more of a distrust in China, where a lot of manufacturing is happening. We've seen supply chains get completely screwed up because of COVID. And so people are doing either reshoring or nearshoring. So either bringing as close as possible. So that's, Mexico or other places, or just bring it to the US. But how do you bring it to the US when you have record unemployment? It's so expensive. Automation.
Yeah.
Right. Tesla's at the forefront of this. They're one of the most automated auto manufacturers in the world. They showed everyone that it's possible, but you can do this for anything.
Yeah.
And so automation. We believe is going to be at the big, or be the big beneficiary of reshoring.
Okay.
That's going to happen. It's going to be a big trend over the next 5-10 years.
Okay. Any other spaces that because we looked at like shipping and logistics, like are there any spaces where we're looking at automation, or is it like
shipping and logistics amazing as well? That's something that like connectivity and the need to have things quicker and more predictable is huge. It's shocking when you really think about because everything is so tech focused and everything that we see, you think every industry is like that.
Yeah.
Warehouses, for example, under 10%, I think, and I saw some report that said under 5% of warehouses have any level of automation or robotics.
Yeah.
Which blew my mind. You think just a bigger portion of it would have it. So it's huge opportunity there. It's the same thing for logistics.
Yeah.
You think there would be more data science in terms of figuring out the best routes, figuring out the best way to connect with people, price predictions and getting the right price. There's so many companies that are coming out now because it's way behind.
Time to cut costs and essentially move
these
forward.
Companies right now, the companies that are growing are going to be the next big ones or acquired by the FedExes and UPSs.
Before we wrap it up, anything about Stack and where can we learn more about Stack? Like what's, give us the rundown.
Yeah. So stackcapitalgroup.com. We have a TSX ticker, STCK. You can find write-ups on all our investments. You can see what we have, but tech is going to do well. Tech is going to do well over the long term. Yeah. We've seen it. This is the future. It happens in cycles. We're in a tougher cycle now, but we're still optimistic and we're growing and investing. And
beautiful. I also think too, I'm not going to throw it in for you, but I'll just kind of say that Jimmy has always been, from I met him a year ago. He's always been open to talk to founders. He's always open to talk to anybody. Plug him on LinkedIn. We'll have some information on that in the bio. Guys, if you're looking to learn more about the journey, you can check out check out the journey, www.takethejourney.co. You can subscribe to us on YouTube. We got Instagram. We got all the fun stuff. And thank you guys so much for listening.
Thanks so much, Zach, for having me. This is awesome.
Thank you.